Hello, my name is Javier Polo, and I'm here again talking about sales tax. As I mentioned before, I wanted to do a video based on myths that people have regarding the subject, sales tax. Mm. It is very important to know certain things when it comes to operating and working with the tax. So there are many doubts in the use, in the charge, in the operations regarding sales tax, um, be it based on ignorance in a good sense of the word, ignorance of basically not knowing um, the details, and that's why many people need the consultation. They need to consult a tax professional who actually does know something about their industry and their business's sales tax. Uh, so I have a few only here written down. I think I'm going to cover a lot of space with this, but these are the basic questions that I've usually gotten, and in some cases, even comments of people who think they're doing the right thing, which I understand in many cases they're not intentionally doing the wrong thing, they just don't know they're doing the wrong thing. So um, I want to provide this clarification, and these few items I think are covering a lot of space. I hope I don't make this video too long. So let's start. The first one would be, if I don't charge it, I don't owe it. What does that mean? People tend to think that if they don't charge it to their customers, they don't owe the tax to the government. That is a total myth. That is not true. The reason why people think that that is so is because many people are used to doing business um, off the records. So when they are off the records, they are not doing things the right way to begin with. So they have to know that that kind of practice is not the correct one. And so anything that is coming from it is obviously not right. So not charging it does not allow you to not pay it to the government. In essence, I have seen cases of many audits and government reviews where the government has come back to the to my client or to the client, and it has seen that the client purposely or unpurposely stopped charging or did not charge to certain people the tax. They came back and said, well, you know what, you still owe it, you still have to pay it, so it comes out of your pocket. So if you are charging it, it's fine, because it's supposed to be. I mean, the whole idea of a sales tax is to charge a consumer, not the vendor, not the business. It's the consumers. So people on the street, walking on the street, using your product is supposed to be paying that tax. So if you don't charge that tax to that person, that means you are going to pay it from your pocket. There are practices there out there from accountants' parts that they decide to juggle around the subject, and they pretty much wing it to keep you, sort of speak, safe. But in essence, not charging it does not mean that you don't owe it. There is the obligation, and the government will make you liable for it regardless of whether you charge it or not. And actually, I have seen cases when they have not charged the right amount, meaning the right percentage. Percentage is 8 and you charge 7. The other 1% is being charged back by the government. So you still have to charge the right amount of tax. And in some cases, it is not willingly that you charge the wrong amount. Let's say they updated the tax rate. The tax rate came from 7 to 8, but your system, your computer still keeps that 7 as a historical number. It has to be updated. But if you don't update it, you're still charging that to your customers, even though when your accountant helps you preparing that return, then when you pay that out, you will see if you were matching dollar to dollar, you would notice that if you charged, let's say, if you only had a sale of $100 and the tax was 7% in your computer, you charge $7. So your income or your incoming flow, the inflow, it's gonna be $107. So understanding that, then when, let's say if that's the whole thing and the whole period, and then you have to report that to the government, then the government receives a tax return that shows 100, but the government's tax returns are updated, so it does have the 8% new rate. So when you charge that, when you calculate that, it's going to come out to be 8, not 7. So basically, the accountant makes you pay 8, not 7. And you would think, well, but I charge 7. No, well, the tax is 8, it's not 7. Your records are wrong. So guess who is paying the mistake? You are paying the mistake from your pocket. The second item is, if I didn't register, I don't have to report it. That's not true. That's another myth. If what makes you report it, it has nothing to do with the fact that you're registered. Obviously, you have to be registered. Obviously, you should be registered. But let's say you're somebody new in a range of services. Let's say your company is already existent, but never registered for that because their services or products were never paying tax. They were never charged in tax. They were never taxable. So you were living for life, for a time, a life with no tax, and then all of a sudden you start implementing a new product, and that new product is taxable. Now, you were not registered to do that to begin with, so that's fine. But then that product that is taxable, the fact that you're selling the item, it is the taxable event. The taxable event is what makes the vendor or the business liable for the tax and supposed to be charging for the tax. So if you are not charging the tax, you should be charging the tax. If you did not charge the tax because you were not used to doing it, even if this is a new product and you never did the research to find out whether it was or it wasn't taxable, then under review it would show that that item is taxable, and so you should have paid the tax. And even if you didn't charge it, you have to pay the tax. So you would have come out of your pocket. Now, let's say you have a taxable event. It doesn't matter if you were registered or not. That was a taxable event. You have to submit your returns, you have to submit your reports, and you have to submit the payment. Later on, or very likely later, you would have to register. It's just a matter of time before the government comes back to you and tells you, hey, you got to register. So that is as far as the non-registered vendors go. You have to register, but if you did not register, it doesn't mean that you don't have to report it or pay it or even charge it. All right, next one is, I bought it out of state, I don't have to pay. Yes, many people go out of state and buy things out of state. What that means is being a non-resident of such state, being the sales tax a statewide tax, meaning it does not go beyond your borders. If you did not pay tax because you're a register of a different state, then you would have to report it to the state where you actually live. And if it is a business, it is a state where you do business, so where your main office is. So if your main office is in New York and you went out and bought it in New Jersey, you have to report it to New York based on the jurisdiction of your main office. So that is related to buying non-taxed items. If it is taxable and you did not pay the tax, then you should report it based on something called the use tax. Because being sales tax a consumer tax, going back to basics, it's a consumer tax. So if you were a consumer, you were supposed to be paying the tax. You did not pay the tax because you bought it outside the state. Then you come back to your state and you have to report it to your state. Many people do that with cigarettes and fireworks in other states where they don't buy with tax because they are not not residents of those states. And then when they come back to the state, they should report that. And even for that, there's a space in the income tax returns. At least in the state of New York, I do know that there is a place where you have to look where you can locate the tax of items that you have sold with no tax. For example, if you sold your car, if I am selling my car and my car was $5,000, and let's say the tax comes to be $450, whatever that may be, $450, then my bill to the buyer should say 5,000 plus 450. It is $5,450. Okay, so that's what I charge. Now, what is my money? 5,000. What is the government's money? 450. The 450 has to be submitted back to the government. Now, if I did not have, because I am regular person, I'm not a business, and I'm not reporting periodically or anything to the state, then the question comes, well, okay, so how do I report that? Well, guess what? Yes, you have to report it. How? You have to report it through your income tax return. At least in the state of New York, that's so. The state of New York's tax return form includes a line item to show how much sales tax you have to report and pay. So that is important to know. That is not correct if people tell you, oh, you bought it out of state, then you don't pay the tax. Now, when you sell to out of state people, this is a different story. You are selling, then you are selling no tax based on knowing that those people are not registered to do business or residents of this state. In general, to individuals, this doesn't apply. Usually, you pay the tax. You go to New Jersey and you pay the tax. You go to Connecticut, you pay the tax. And as an individual, usually you get charged no matter what. But in some cases where you don't pay the tax, then you should report it to your home state. Same thing happens when you sell it. When you sell to another person, that person is doing business in New York, even though they are registered in a different state and they have no offices in New York. They are out of state, but they are doing business here in New York. So you have to know that difference. Now, many people just bypass that, and I'm not going to talk about that. It's just the way it's supposed to be. The other one is, if I am registered to charge sales tax, I don't have to pay it to anybody. That is half true. It is not true to the fact that you're a consumer as a business. Let's say you sell cameras. If you sell cameras, when you buy cameras, you don't pay the tax because you charge the tax to sell those cameras. But if you're selling cameras and you're buying books, then buying the books is for your own consumption. Or buying pens, buying notepads, buying items that are being consumed by you. So if you are consuming the item, then you are on the side of the consumer, not on the side of the vendor, or in the side of the wholesaler, or even the manufacturer. So you are consuming the item. If you are consuming the item, you have to pay the tax. I have seen cases of sales tax audits where the auditor requests the purchases of assets, purchases of office items. And it's basically because they want to make sure that you did pay the tax and you're not using your resale certificate to buy stuff that are not supposed to be non-taxed. They are supposed to be taxed. So just understand that difference. There is some truth to the fact that when you buy your items or merchandise for sale, when you buy it, you don't pay the tax to the vendor that's selling it to you, because you are a vendor who sells it to the ultimate user, the consumer. So that consumer is the ones who are supposed to be paying the tax, and so you charge it to them, and you then pay it back to the government. So that's the way it's supposed to be. One more is, if I provide services, I don't have to charge the tax. Well, services, there are services that are taxable and there are services that are non-taxable. So it's just a very detailed item. You have to know your industry, you have to know your product, you have to know what you're selling, and it's not your accountant, because a lot of times us accountants do not know what you sell, do not know the details of what you sell. So sometimes we know you're a supermarket, but there are items in the supermarket that are taxable, and there are items in the supermarket that are non-taxable. A deli, for example, is a mixed or hybrid kind of business that sells a lot of food. Food items in the city of New York are non-taxable, but then when it comes to selling other items that are not necessarily food, they are taxed, or they're supposed to be taxed. So it's very detailed and it's very specific to any case that is kind of reviewing this option, but you do have to know your business and your services and what you do provide. Some services are taxable, some services are non-taxable. For example, I am a tax preparer. Tax preparation services are non-taxable in the state of New York. So I do not pay tax. I do not charge tax to my customers or my clients. But in some cases, I do pay the tax. I mean, all the time I pay the tax, because anything that I buy is for my consumption. So if I pay for the software that I am using to prepare taxes, that software is being taxed to me. So I am the consumer of such item. And then they take the money and they pay it to the government. So based on the jurisdiction, I pay the tax. Based on my jurisdiction, I pay the tax as a consumer. Although my service is not taxable, so it can't be mixed. So you have to just know what your service is and whether it is taxable. Each state's website has details on that, and when there's no details, you can always call the state or your tax advisor for that matter. The last one is pretty light kind of myth, but I'm leaving it as the last because just misunderstandings out there are many. So I'm gonna leave it to this point where I live with these 6. The last one would be that the sales tax is reported to the IRS. People confuse IRS with the Department of Taxation of the state. As I have mentioned before, sales tax is a statewide tax, is a state-based tax, and it's a consumer tax based on a state and the jurisdiction where you are registered, or to the business, or where you live as an individual. So the IRS is the federal government and is not supposed to deal with sales tax. They have nothing to do with sales tax. So when you say the IRS is auditing me for sales tax, that's wrong. It is the state that is auditing you. And if somebody from the federal government wants to come to you based on sales tax, then there has to be a major reason for that. So anyway, just to clarify, the IRS is the federal government, it's not the state government, and there are and the state government is the one in charge of um, reviewing, collecting, and working with sales tax. All right, I'm gonna leave it to here to this point. I think I covered a lot of space and it's long enough already. So I appreciate you staying there and hanging on with me. I hope to see you soon. Thank you very much.